Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today I'm going to go over a bunch of uranium information, show you guys what a lot of people are talking about on Twitter. It's the most recent information that I usually follow. I do think Twitter is a good spot to get all this information. If you want to follow me on Twitter, my name is finding_finance. So you can follow me on there and add me as a subscriber, or I think that's what it is, a follower, whatever it's called. I go on there, I post some stuff, I post some charts, usually big picture type things, showing how incredible this bull market is in commodities. But this one, I'm going to go over uranium and show you what the most recent news is for uranium. So let's dive in here, and I'll show you what I've got. So there was an article on there by Armchair Banker. It says everyone should have uranium in their mind right now. It says, as the war between Russia and Ukraine continue, many Western companies are heading to the exits. Many of these companies are European companies. Many of these companies are energy companies like BP and Shell. Germany also shut down the Nord Stream 2 pipeline. Europe is learning the hard way what it's like to not have energy independence. Europe also wants to decarbonize by 2050. As Europe plans to decarbonize and depend less on Russian energy, one word comes to mind: nuclear. Exactly. I guess the uranium markets are echoing this statement. Uranium spot prices are at one-year high, as shown below. And this is the this is economics, trading economics. That's where this chart was obtained from. They're showing the uranium price. This is actually, I think, above $50 now. We are breaking out of this. We've got a nice good pattern here that is breaking. Everything looks really good for uranium in terms of the technicals. And here it says the EU recently declared nuclear power and gas to be green investments, which means that the EU will be taking initiative for more nuclear power plants so that the continent can go green. As gas supply from Russia becomes an issue, the EU will have to depend on nuclear power. Totally agree. Moving on here, this is which European countries depend on Russian gas, the percent of gas supply from Russia in selected European countries. We've got North Macedonia, 100%, Bosnia and Herzegovina, 100%, Moldova, 100%, Finland, 94%, Latvia, 93%, Bulgaria, Germany, Italy, Poland, France in the mid-tier. And then you've got Netherlands, Romania, Georgia, Ireland, and Ukraine, which has zero dependence. So a lot of these countries are very much dependent on Russian gas, as you can see. Coming down here, John Quates, it says the uranium futures front month contracts spiked higher by $1.25 today to US 51.60 a pound, now up nearly $34 plus 188% from decade low of under $18 a pound in November 2016. But still far below the $65 to $80 a pound needed to get major new mines built to fuel this new pound nuclear renaissance. So that's good. We've got a chart here. This is John or Jay Hinster. I just threw this chart in here. He's got a lot of charts out there. He's got this guy with a megaphone type pattern where we've got the moon up here in the upper right and a nice good bullish engulfing here, heading higher, breaking through some resistance. Looks really good. SPUT Asset Management, looking for SPUT. It's another busy day for the SPUT Physical Uranium Trust with 500,000 pounds of uranium added. They added 8 million pounds year to date. Uranium price hits its highest level since July 2012. So that is from the SPUT Asset Management Twitter feed. Looking on down, it says exclusive. U.S. utilities push White House not to sanction Russian uranium. Why would they want to do that? It says the U.S. nuclear industry is just addicted to cheap Russian uranium. Duke and Exelon, two of the largest U.S. utilities, cannot immediately be reached for comment. Moving on up, says the U.S. nuclear power industry is lobbying the White House to allow uranium imports from Russia to continue despite escalating conflict in Ukraine. With cheap supplies of the fuel seen as key to keeping American electricity prices low, according to two sources familiar with the matter, the United States relies on Russia and its allies, Kazakhstan and Uzbekistan, for roughly half of the uranium powering its nuclear plants, about 22.8 million pounds in 2020, which in turn produces about 20% of the U.S. electricity, according to the U.S. EIA and the World Nuclear Association. Kevin Bamborough, a uranium investor, sometimes he's got some pretty cool tweets. Pound uranium will prove to be the most dramatic. In my humble opinion, $200 a pound can happen much quicker than people imagine. The stupidity of utilities for not having better coverage will soon be laid bare. The greater stupidity of some miners having locked in low-priced supply agreements. I agree. I'm going to go to the upper right here. What we've got for some other quotes. It never was my thinking that made big money for me. It was always my sitting. Got that? My sitting tight. And what that is a quote from Jesse Livermore in a book that was written, I think it's The Reminiscences of a Stock Operator. Kevin Bamborough, another one, it says, if you think Europe looks stupid this winter being short on electricity, gas, and coal, you ain't seen nothing yet. The shortage emerging in the uranium space has the potential to take uranium price to unimaginable levels, and if hoarding occurs, and nuclear plants. Yeah, it's got a huge potential. That's why I'm heavily invested or have a good exposure to uranium mining companies. Now, this was posted by Scott. Scott is another uranium bull. This is the Nasdaq Composite Index. And what he has here, and this is just a reminder, I've showed this before, this is the rate hikes, the Fed funds rate hike. The first rate hike right here, and when it started to go up, we could see that the Nasdaq Composite started to falter and pull back. And we went sideways for a very long time. This yellow line's in 2004. So we were pulling back. They were raising rates and we continued to pull back. It's basically a big pullback or a sideways consolidation period in the NASDAQ. Very similar to what we're going through today. And then if we look at what DML, this is DNN or Denison Mines, we pulled back with the NASDAQ Composite originally before this yellow line. We pulled back with it. Then when the Fed first rate hike went in, it was on like Donkey Kong, moving on up. CCJ did the same thing. Here's your Fed funds increase. We pulled on back with the NASDAQ, and then we were gone. This is very similar to what I was saying about an initial rollover where everything's going to be tied together, and then we're going to break apart at some point. A lot of people had asked me, well, how big's the pullback? How big is this? And I said, I don't necessarily know how big the pullback will be. I just know it's going to probably pull back together. And then eventually they'll break apart. And we're breaking apart right now. We're going to probably see a massive move higher. And this first rate hike is integral to this move. And I think it also is going to move precious metals and other commodities as well. You're going to see a big rotation of money occur. Another thing I wanted to cover, I threw a couple of very long-term charts in here. I'll zoom in here. This is deep yellow. And what we're looking at is we're seeing a long-term resistance line. That's what this black line is in here. When you have this big black line in here, it is resistance. You hit it, you hit it, you hit it, you hit it. We tried breaking out and we came back down. When we break this black line, guys, it is on. It is on, and we're about to break it very soon. What we've got is a double top, and then we came down and went into a long consolidation period. We've done that with Bannerman, and Bannerman is a little bit different. We came into this long consolidation period. You can see it. We broke out to the upside. We came to do a retest. And what do we do on retests? Everybody should know. We buy the retest. I did as much as I could in a lot of these companies. I did Deep Yellow. I did Bannerman. And then when we break, it's going to be a fun ride going higher because that resistance, that containment by the pattern will cease to exist. Those sellers will be overwhelmed by buyers. And we're getting the same thing on Denison Mines. I just threw this one up here. Lots of contacts in here. We're getting up to that. We're contacting again. We pulled on back. We hit our head, pulled on back, and then I think we're going to bust through here very soon for a very large movement. If you look on the left-hand side, we've got a little bit of resistance through here, and then we've got this gap all the way to about $5. We could be sending it to these highs here, and then eventually a $5, $5.50, $6 price move pretty quick. And then this pattern does repeat. Bitcoin had this pattern, very similar pattern like this. It's the same pattern as these double tops. And we broke that pattern. It went up. And now we created another kind of double top movement. Will this move up? I don't necessarily know. But whenever you break these kind of long-term patterns, and you can even draw the pattern where my finger is on this guy going all the way across here, you can, whenever you break these big resistance areas, that's when it really starts to move. And if you look at the way this pattern moved in this section right here, this kind of upward and down movement, it's a lead-in for a massive move. And guess what? We have that lead-in move right here. It's the same move as this move is here, this entire thing. We get it, I call it a double hump. One hump, second hump, and then a big move. One hump, second hump, big move. They all exhibit this double hump movement before a launch. There's the first hump, the second hump, and then a launch. So to me, remember, this is all humans interacting with each other, causing these patterns. So for me, what I'm doing is I already purchased. I'm in. I'm not doing anything. I'm doing exactly what that quote is doing. It says, it was never my thinking that made me big money for me. It was always my sitting. It says, got that? My sitting tight. I'm not doing anything. I got my shares. I'm holding on. And now I get to watch and feel this ride. It's going to be absolutely, I think it's going to be terrific. It'll be fun. Hopefully we don't get too many big pullbacks. It's mainly just big old rips and then sideways movements from here on out for a little while. Fingers crossed. But if you guys want to ride it with everyone on the channel, definitely subscribe. Give me a thumbs up for the content, guys. That's at least the most recent information that I've seen in the uranium space. I do think that Encore Energy also is raising capital. They raised some money. They're going to become a producer. Remember that the Lassonde curve, if you remember the Lassonde curve, you've got a developer and then a producer. And that the biggest gains can be had from a beginning developer to a producer. Their pounds in the ground are going to be revalued higher. That is value for shareholders. I would be a buyer of Encore Energy. It's my largest holding, one of my largest holdings. And I think it's a good opportunity to actually pick up shares, not to sell them. The dilution will bring the price back a little bit, but they're going to add value to those pounds as they develop into a producer. So I do think that is a huge advantage for them. And if people aren't buying the Russian pounds, the Russian uranium, it's going to put more pressure to buy things that are local. If they can get to production quickly, they might add a lot of value to shareholders. They may, I don't know if it's advantageous to be early, middle, or late. That's why I own all these. Sometimes it's probably advantageous to be later to the game, where you get higher contracts if there's contracts out there, or whatnot. But as long as you go into production, I think this cycle, you're gonna probably do very well. But I think we're heading higher, much higher, and you just got to ride on. You just got to ride it. You know, don't be trading in out. Just ride it. Let it make you money. Subscribe to the channel if you haven't already. Thank you for listening. This is Finding Value.